This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. World fossil fuel demand is set to peak by 2030 as more electric cars hit the road and China's economy grows more slowly and shifts towards cleaner energy, the International Energy Agency said, undercutting the rationale for any rise in investment. The report from the IEA, which advises industrialized countries, contrasts with the view of oil producer group, the Organization of the Petroleum Exporting Countries, which sees oil demand rising long after 2030 and calls for trillions in new oil sector investment. In its annual World Energy Outlook released on Tuesday, the IEA said peaks in oil, natural gas and coal demand were visible this decade in its scenario based on government's current policies, the first time this has happened.
Asian equities slipped to their lowest in more than 11 months on Tuesday, while the dollar wobbled in cautious trading ahead of a slew of economic data that will provide clues to the next steps from the U.S. Federal Reserve. Oil prices recovered some of the previous day's losses in early Asia trade as nervousness prevailed in the market amid worries that the Israel-Hamas war could escalate into a wider conflict in the oil exporting region. MSCI's broadest index of Asia-Pacific shares outside Japan was 0.28% lower at 473.37. Having touched 472.73, the lowest since November 2022. The index is down 3% for the month and set for its third consecutive month in the red. Japan's Nikkei fell nearly 1%.
Moving on to the top news in the energy sector.
Oil prices rose on Tuesday, recovering some of the previous day's losses, as investors remained nervous that the Israel-Hamas war could escalate into a wider conflict in the oil exporting region, causing potential supply disruptions. Brent crude futures climbed 57 cents, or 0.6%, to $90.40 a barrel by 0321 GMT, while U.S. West Texas Intermediate crude futures increased 54 cents, or 0.6%, to $86.03 a barrel. The market is up on an adjustment after a drop in the past two sessions and on nagging fears of possible supply disruptions in the Middle East, said Yuki Takashima, economist at Nomura Securities.
Portfolio investors tiptoed back into the petroleum market last week, after 3 weeks of heavy selling, as conflict in the Middle East threatened to disrupt crude oil supplies. Hedge funds and other money managers purchased the equivalent of 10 million barrels across the 6 most important futures and options contracts over the 7 days ending on October 17. The buying came after managers sold a total of 197 million barrels over the previous 3 weeks, according to records filed with ICE Futures Europe and the U.S. Commodity Futures Trading Commission.
Next, we have the top news in metal markets.
Gold prices rebounded on Tuesday as benchmark U.S. Treasury yields pulled back, while investors awaited economic data for guidance on interest rates and monitored growing tensions in the Middle East. Spot gold was up 0.2% at $1,976.09 per ounce by 0529 GMT, while U.S. gold futures were steady at $1,987.10. Benchmark 10-year U.S. Treasury yield declined, after briefly rising above 5% on Monday and further threatening an economic slowdown on higher borrowing costs.
Iron ore futures rebounded on Tuesday after hitting nearly 2-week lows in the previous session, as Beijing was seen preparing an additional sovereign debt issuance as part of efforts to spur economic growth. The steelmaking ingredient, however, was confined in tight price ranges, with its gains capped by persistent worries about a deepening crisis in China's property sector. The most traded January iron ore on China's Dalian Commodity Exchange ended morning trade 1.1% higher at 842 yuan, $115.31 per metric ton, after a 3-session slump. We will now look at the top news in the agricultural sector. India is expected to cut the floor price it has set for basmati rice exports, government and industry sources said on Tuesday, after farmers and exporters complained it was damaging trade. The government is likely to bring down the floor price, or minimum export price, MEP, for basmati rice, to $950 per metric ton from $1,200 a metric ton, said the sources, who did not wish to be named because the decision has not been made public. India imposed a $1,200 per ton MEP on basmati rice shipments in August to keep a lid on local prices ahead of key state elections.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.